understand technical analysis in order to make good trading decisions is pivotal to your success as a trader. If you're new or a little experienced to trading, it's easy to get lost amongst all the noise out there, and it's hard to know what to pay attention to. My name is Hussam Sami. I'm the founder of SFX-GLOBAL, where we help everyday people go from complete beginners to profitable traders. Now guys, in this video, I'm going to share with you the exact same strategies that I have used to profitably navigate the Forex market, and which has helped others do the exact same thing. I'm going to share this knowledge with you guys for absolutely free. That's right, no cost at all, guys. So all I ask is that you please smash that like and subscribe button if you find some value in this video. So before we get stuck into the good stuff, I ask that you please pay attention to this disclaimer. Alright guys, welcome. So what are we going to cover in this video? So over here we're going to cover what is technical analysis. We're going to get stuck into, I'm going to explain to you what technical analysis is and what we're going to use it for. Then we're going to talk about what is a time frame on a chart. We're going to get stuck into candlestick charts, and I'm going to show you how to understand what a single candlestick means and how to gain an understanding of what it's trying to tell us. Next, I'm going to tell you the only two candlestick patterns you will ever need. Then we're going to talk about what is a trend and how we ascertain the trend of the market, whether that be Forex, crypto, anything, how we ascertain the trend. Then we're going to talk about trend lines and the biggest mistakes people commonly make, and the biggest misconceptions about trend lines and their importance. Then we're going to talk about support and resistance, value area, supply and demand, and how we draw these areas on our charts. Then we're going to get stuck into a few entries, exits, and stop losses. So how you're going to take your entries and where you're going to place your stop losses and your targets. And then finally, we're going to go through a couple of examples where you're going to see all of this stuff that I'm about to show you fall into place. Let's get started. Firstly, what is technical analysis? So, technical analysis encompasses a range of techniques used to try and forecast the future movement of price on a financial chart. This is often based on the past movement of price and patterns that have occurred in the market over and over again. So technical analysis uses past patterns that have occurred in the market, and then we can predict with high probability that these patterns will play out in similar ways in the future. Next, we will focus on price action, which is a form of technical analysis, and it's the analysis of the high and low points of price. Now, in my opinion, this is the most accurate way to analyze the market. We don't rely on any indicators, no BS, nothing confusing. Price on a chart, it conveys the sentiment of the market, the sentiment of the psychology of the market, the large players in the market. So, when you get an understanding of price action and what the price is actually telling you, you're a step ahead of the game. You're not relying on lagging indicators and stuff like this. Now guys, you must always remember that technical analysis of a financial instrument never yields certain outcomes. We can try to predict with high probability an outcome, but nothing is certain. However, when used correctly, it increases the probability of a certain trade idea being profitable. And what is the time frame of a financial chart? As you can see here, this is a price chart, and you can see various time frames. So we can view the historical change of price of an asset, whether that be, in this case, USD CHF, Bitcoin, gold, anything, over various time periods. So you can view it over a week. So this is the price of a USD CHF over a weekly time frame. Then you can view it over a day. This is the price of, the price chart over a day. So each candle represents 1 day. 12 hours, 4 hours, so on and so forth. So you can view the price of an asset over various time frames. So a price chart has numerous time frame settings that we can utilize. This ranges from 1 minute to 1 year. Now, on the 1 minute time frame, each candlestick depicts the price movement in 1 minute. Similarly, on a 30-minute time frame, each candlestick depicts the price movement in 30 minutes. And on the 1 hour time frame, each candlestick shows the price movement in that hour. So on and so forth. Now, in this strategy, we will always use multiple time frames to gauge our entries, exit points, using a top-down approach. What do I mean by top-down approach is we will start our analysis on the larger time frame, such as the daily or the 12-hour time frame, and then we'll go to smaller time frames to pinpoint our entry points. So once we have the confirmations, you will learn, we will shorten the time frame to the 4-hour or the 1-hour time frame to seek our entries, exits, and stop losses. So like I said, more on this later. Now, what is a candlestick chart? So over here, you can see this is USD CHF. You can see, what does this chart have on it? These things are called candlesticks. Now, if we look at a Bitcoin chart, or let's look at a Ethereum chart, you can see similarly, this is also the price movement is portrayed to us in a large number of candlesticks. Similarly, if we were to look at a commodity, for example, gold, the price movement is also depicted in terms of candlesticks. Now, again, we have various time frames across all these asset classes. So, this is the daily chart of gold. This is the, let's go back to Ethereum. This is the daily chart of Ethereum. Again, you can view the price of Ethereum on the weekly time frame, where each of these candles here on the weekly, this is the price movement throughout the week. Similarly, if we go back to USD CHF, this is a currency pair. This is the price movement over a week, over a day, so on and so forth. Now, as you can see, the foundation of all technical analysis, no matter what market you are trading, are the candlestick charts and an understanding of what these candlesticks actually mean. So before we can piece together what all the candlesticks mean, let's break down what a single candlestick actually tells us. So candlesticks are the language of the market. They depict not only the price of the instrument, i.e. the currency pair, whether that be AUD USD, Euro USD, like I showed you, Ethereum, or gold. It also depicts the psychology of traders. Now, we have over here, this is the anatomy of a candlestick. This is essentially the what they look like and what they show to us. Now you can see here these candlesticks, they're generated across various time frames. So whether that be the 5-minute, the 1 hour, so on and so forth. So what do they actually mean? Now, breaking this down, if the closing price of the candle, which we simply refer to as the close, is above the opening price, which we refer to as the open of that time frame, then a bullish candlestick, usually displayed as green, is drawn. So as you can see over here, if the closing price here, so this is a bullish candlestick, is displayed as green. Now, if the closing price of that candle in that time frame is above the opening price, then it's a bullish candle, and it's depicted as green. It means buyers push the price up in that particular time frame. Now, if the close is below the open, then a bearish candlestick, usually displayed as red, is drawn. So if the closing price of that candle, say we're on the 1 hour time frame, which we are here, say that the closing price of that 60-minute interval is below the opening price of that candle, then a bearish candlestick is formed, and it's often depicted as red. Now, the middle section is the body, and that's the area where the price traded the most in that time period. The wick, which is these thin extensions above and below the body, they depict the highest and the lowest points of the price. So in this green candle, you can see the price it opened here, and then the highest point, so the price pushed all the way up here. However, sellers pushed it back down, and we closed at this level here, which is still above the open, hence why we have a green candlestick forming. Now, similarly, this was the open of this green candle. The price pushed down, however, buyers stepped in and pushed it back up. Therefore, this was the lowest point of the candle. This was the lowest price the candle reached in that time period. Now, on a bearish candlestick, it's the same principles, right? So we opened here. Buyers tried to push the market up. However, the sellers stepped in. We pushed the market down, and we you know, this was the lowest point that we reached, and this was the close. Now we closed below the open, hence why it's a bearish candlestick. Sellers were in control in that time period. So the wick is the thin extension of the body above and below the candle. It shows that the price reached these levels but failed to hold there. Now a wick at the top of the candle, like I just mentioned, shows that buyers pushed the price up to those levels and sellers pushed it back down. Similarly, a wick at the bottom of the candle shows that sellers pushed the price down and buyers drove it back up. Now let's look at the anatomy of candlesticks. So the longer the body of the candle, the stronger the buying or selling pressure. So if we go to, you know, a price chart here, for example, we're on USD CHF on the 1 hour time frame. Now you can see here the larger the body of these green candles, that's it shows strong buying pressure. Similarly, you know, if you, let's change the time frame here to the daily time frame. If you see large bodied, you know, red candles, this means strong selling pressure. Now short bodied candles show very little buying or selling pressure, such as these candles here I'm going to show you now. So, you know, if you see these kind of candles here, for example, this shows very little buying or selling pressure. In essence, it's indecision of the market. It's trying to establish, you know, if buyers are in control or sellers are in control. Now, you get these candles across all time frames. So again, you can see, you know, large bodied candles and you can see the prices going down. We have selling pressure. Now, you know, you have small indecision candles. It's trying to, you know, assess who is in control. And then we have buying pressure, large green high momentum candles again. A candle with a long upper wick and small lower wick shows that buyers tried to push the price up, but then sellers drove it back down. This is known as a rejection. So candles with large wicks are known as rejection. So you can see here, for example, you know, buyers tried to push the market up and then sellers drove it back down. So it was a rejection to, you know, this area on the chart, to this level. Similarly, a candle with a long lower wick and small upper wick shows that sellers tried to push the price lower, but buyers entered the market and drove it back up. So let's go ahead and find, you know, a strong rejection candle for you guys. Let's go to the daily time frame and see if we can find one. And, you know, you can find one right here. So here's another example, you know, of a strong rejection candle. Here, you know, buyers tried to push the market up, sellers stepped in and pushed it back down. Similarly, here is a selling rejection candle. This one here, you can see, you know, buyers tried to push the market up, sellers stepped in and pushed the market back down. Now here's a buying rejection candle right here. You can see sellers tried to push the market down and then buyers stepped in and we rejected to this level here. We rejected to this level, buyers pushed in, and then the price continues in an upward direction. So these candlesticks, you know, the anatomy really carries significance. Now the larger the wick, the stronger the opposing pressure. So, you know, the bigger the wicks we have. So here's another example here. You know, see, this is a huge wick here, and you can see, you know, sellers tried to push the market down, and then buyers stepped in and pushed the market back up. And the larger the wicks, the stronger the opposing pressure. Now guys, the only two candlestick patterns you're ever going to need you know, take trade confirmations and stuff like this are the bullish engulfing and the bearish engulfing. So the bullish engulfing is a buying candle that engulfs or overlaps a previous selling candle at a key level. Similarly, a bearish engulfing candle is a selling candle that engulfs a previous buying candle at a key level. The formation of either engulfing pattern at a key level on any time frame signals the market will commence its next, you know, high momentum, impulsive or corrective move. So let's take a look at this on a chart. As you can see here, a bullish engulfing, it engulfs the previous selling candle. It towers over it. Similarly, a bearish engulfing, it engulfs the previous green candle or buying candle, and it shows you that sellers are in control here on this occasion, and here buyers are in control. And what does this actually look like on a price chart? So you can see here, for example, we have a strong rejection and engulfing candle, and look at the pressure that follows immediately after. Similarly, over here you can see we have a strong engulfing candle here, and then look at the buying pressure that follows afterwards. And we can change the pairs to try find some other examples. So here again you can see we have a strong engulfing candle, bearish engulfing candle, and look at the move that follows afterwards. And over here you can see we have engulfings, rejections and engulfings, and more engulfings, and then look at the move that follows afterwards. So these candles carry quite significance on a price chart. Now the next candlestick that is of high importance to us is the bullish and bearish candle rejection. Now the property of the bullish candle rejection entails large wicks on the bottom of the candle and a close near the open or higher than the open. So a bullish candle rejection, we have large wicks on the bottom of the candle. So you can see sellers tried to push the market down, buyers stepped in and pushed it back up. And we have a close near the open. On this occasion we have a large wicks underneath. So you can see sellers tried to push the market down, buyers pushed it up, but on this occasion we close above the open, hence we have a green candle. Similarly, a bearish candle rejection consists of large upper wicks and a close near the open or lower than the open of the candle. So we have large wicks on the upside of the candlesticks. So it shows buyers tried to push the market up and sellers pushed it back down. On this occasion we closed below the open. So it shows strong selling momentum. Similarly, here we have quite a large wick on the upside of the candle, and sellers push the market back down, and we close above the open, but it's strong selling pressure. The color of the candle on a bullish and bearish rejection is not important. The large wicks show that the market tried to push in a certain direction. However, strong opposing pressure stepped in. So at key levels, which I will explain to you guys soon, when you see these candles, it shows that strong buying or selling pressure is arriving. What is a trend? Now, the movement of price between 2 points on a chart occur in waves that form trends. And if you look here, guys, you can see the market never moves in a straight line. We always have these wave-like formations, and these are trends that occur. Now, this is a bearish trend or a downtrend, which I will explain to you in just a moment. Now, similarly, when the market is pushing up, we move in trends again, so in waves. So you can see this again. So the market is trending upwards. Now, if we change the pair, let's go to, let's look at Ethereum, for example. So I can show you guys that these occur on all price charts. So you can see Ethereum here, when the price is going down, it doesn't just shoot in a straight line. We trend downwards as such. Similarly, when the market is moving upwards, you can see we are trending upwards as such. In wave-like pattern. Now, in a trend, these waves materialize on the charts in the form of impulses and corrections. Now, an impulse is a swift, high momentum move in the direction of the trend. They occur because we are trading in with the majority of the market. So, we are trading in the direction of the sentiment. So market, the price of the asset is moving up in a high momentum move, or down in a high momentum move. Now a correction, however, is a move against the overall trend of the market. So if we are trending upwards, as such, this is the impulse. Then we have a correction, which is this move. Then we have a new impulse, which is this move, and then we should have a new correction, so on and so forth. The price never moves in a straight line. Similarly, if the price is moving downwards, we have an impulse, and then a correction, and then a new impulse, and so on and so forth. Now the correction, however, is the move against the overall trend. Now guys, the trend is simply the path of least resistance of the price. It is our job to identify the trend and to trade with the trend for the highest probability of success. By trading with the trend, we ensure we enter the market at the right time, and we are trading in the same direction as the majority of the other players. So, like I just mentioned to you before, here the price is trending upwards, and we have an impulse and corrections, impulse and corrections, impulse and corrections. The price is moving in waves. Similarly, when the market is, moving downwards or selling off, we have again impulses and corrections, impulses and corrections. And you'll understand all of this in the trade examples which will follow. Now, what is the market structure of an uptrend? So there are two kinds of trends, an uptrend and a downtrend. So an uptrend is when the market is moving upwards, and then we have a downtrend when the market is selling off. So when the market is moving upwards, we're bullish. The sentiment is bullish. When the market is selling off, the sentiment is bearish. So the market is in an uptrend when the price is making a series of higher highs and higher lows. And what do I mean by that? When we have waves as such, see, we have waves as such, higher highs and higher lows. The market is making new high points and new higher low points, new higher high points, new higher low points. The trend begins to show a sign of weakness when it fails to print a higher high, and the trend has ended once the price makes a new lower low. So guys, here we are on GBP USD. You can see here, what do you guys reckon is going on here on GBP USD? You can see clearly we're making new higher highs and higher low points, and therefore the price is trending upwards. And we can break these waves down into impulses and corrections. So you can see here, for example, this is an impulse, this is a correction, this is an impulse, this is a correction, this is an impulse, this is a correction. And so the impulse is the high momentum move in the direction of the trend in an uptrend to make the higher high. The correction is the counter trend move to make a higher low. The new impulse to form the higher high, and we expect a correction here as such. Now, the trend has reversed in an uptrend when we have formed a new lower low. So for example, if the price was to do this, and then we fail to make a new higher high, that's a sign of potential reversal, but we must wait for a new lower low to form. We must break the previous low, and then that's a sign that the trend has reversed. So the next form of trend we get in the market is a downtrend. Now in a downtrend, the market is making lower highs and lower lows. The trend begins to show signs of weakness when it fails to make a new lower low, and the trend ends once the price makes a new higher high. So similar to an uptrend, we will see the market making lower lows and lower highs on this occasion. So the opposite of an uptrend. And on this occasion, we'll look to take a sell position as the market forms a lower low and then the lower high to continue its bearish momentum. So if we break this down, in a downtrend, we wait, the market makes lower lows and lower highs. And once the lower low forms, we wait for the corrective structure. So this is the impulse in a downtrend. We wait for the correction, and then we look to take a sell position after the correction, because we anticipate the next impulse. And in an uptrend, we only look to take buy positions in the market as it makes the higher high and then the higher low to trade with the bullish momentum. Now, the next form of market structure we get is a range-bound market. So, when the market is, when the price is range-bound or consolidating, it is making equal highs and equal low points, as you can see here. It's failing to make new higher highs or new lower lows. Instead, it's going sideways. This will occur after large moves and when the price is at significant levels. Now, a range shows indecision by the buyers and sellers. We will simply wait for the trend to be established and for the market to pick a direction before we look to trade. So when we are in a range, we want to see a new higher high and then a higher low before we take the trade, or a new lower low and a new lower high before we take a sell position. Now, the market trends or ranges across all time frames, guys. So once you can understand the trend, we can apply this knowledge to look for setups. So let's take a look at a downtrend on the chart. So let's go to GBP USD on the daily time frame here, because I saw this and now we can see this. So, you know, taking on what I just told you guys, you can see a downtrend is when the market is making new lower lows and lower highs as such. Can you see this? Lower lows, lower highs, lower lows, lower highs, and we expect this to push back down for a lower low. And a range-bound market, guys, is simply when the market is going sideways. So an example of this would be, you know, something like this. Here, you can see here, the market is failing to make new high points and low points here. And now we have a new lower low, a lower high, because if you count this wave, a lower low, a lower high, and then bang, we have the next impulsive wave. Nice and straightforward, guys. And you know, similarly, if we wanted to take a buy position here, we would want to see the market push up, form a new higher high point as such. Now this would be the impulsive wave. We know a correction is coming, and then you know, we wait for the correction to then take the next buy position. Into what is a trend line? So trend line is an oblique line that the price reacts to. It's simply the connection between two or more price points in a trend. In a bearish trend, we will draw a trend line by connecting the decreasing highs as such, as I've shown you here. So in a bearish trend, we know that the price is making lower lows and lower highs as such. Therefore, we can draw a trend line connecting the dots as such. Now, similarly, in a bullish trend, we draw a trend line by connecting the higher lows. In both scenarios, as the price approaches the trend line, we anticipate a continuation of a trend. So in an uptrend, when the price is making higher highs and higher lows, we can draw a trend line connecting the dot. As the price approaches the trend line, guys, we can anticipate a potential reaction and a continuation of the trend. Now, we will adapt our trend lines with the most recent price action to ensure we get the most touches. The more touches a trend line, the more times a trend line is respected, the more important it is for us. Now guys, as price approaches the trend line, there is a threat of what is called a breakout of the trend line. So as we, you know, approach the trend line, the price can potentially break out of this trend line. And this is when the price fails to react to the trend line and rather continues to pass through it. This suggests the weakening of the trend and a possible reversal. However, guys, a breakout of a trend line does not confirm a reversal of the trend. We must first see, we must also see an accompanied reversal in the price action. So, for example, if we have a downtrend as such, the price is making lower lows and lower highs, we can draw a trend line connecting the dots. However, just because the price breaks the trend line, that does not mean the trend has reversed, because pay attention to the price action. We have a lower low, a lower high. We have a lower low. This is still a lower high. So we can still continue to drop as such because this high is still lower than this high. We must see a complete break of the previous high to form a new higher high, and then a retest to confirm the reversal of the trend. And most people get trapped, and this is a common huge misconception about trend lines. You'll see a lot of traders They simply believe just because a trend line is broken that the trend has reversed. This is completely incorrect. Again, in a bullish trend, we can draw a trend line as such. Now, just because the price, breaks below the trend line, this is not a reversal of the trend. This is an even low, and we can still continue upwards to form a new higher high. We must see a break and a retest to confirm the reversal of a trend. And this is I've drawn this here for you guys to understand as well. So in an uptrend, we connect the increasing higher lows. In a downtrend, we connect the decreasing highs. And as you can see, just because we break the trend line, it does not mean the trend has reversed. We must see a reversal in the price action, the high and the low point. So we must see here a higher high and a higher low to confirm the reversal of the trend. Now next, guys, I want to talk about what is support and resistance. So support is an area on the chart where the price has previously made a low point or a series of low points and failed to previously push lower. At support, we expect buyers to step in and support the price from further falling. So if you look here, for example, if we have a series of low points as such, this is a level of support. We anticipate buyers are stepping in and they are holding the price up, right? And so we expect buyers to step in and support the price from further falling. Similarly, resistance is an area on the chart where price has previously made a high point or a series of high points and failed to push higher. So if the price is pushing up and it's failing to push higher, this is now a level of resistance. Sellers are, pushing the market back down. And this is where we expect sellers to step in. Now, in an uptrend, when a previous resistance is broken, the price will look to come back and retest that zone. This may act as support for price to form a higher low and continuation. Now, what do I mean by this, guys? In an uptrend, we know the price makes higher highs and higher lows. So here's a new high, a low. Here's a higher high. Now, we've broken this level of resistance. We expect it to act as support. The price is going to come back, so we know this is the impulse. We expect the correction. It's going to, price is going to retest this level with high probability before the next continuation. Nice and simple. Now, in a downtrend, when support is broken, the price will look to come back and retest that zone. This may act as resistance for the price to form a lower high and continuation. So, in a downtrend, we know that the price makes lower lows and lower highs. So now as we form this new lower low, we have broken this previous level of support, right? We expect it to act as resistance. Now the price is we expect it to come back to form the lower high, confirmed by, the rejection or engulfing candles we spoke about before its next impulsive wave. Straightforward stuff. Now, when we draw support and resistance zones on our chart, we will focus on the most recent price action on the daily time frame. This is where we start to piece together everything I've been talking about. We will always analyze our charts from the larger time frame, as I mentioned earlier on. We'll start from the daily or the 12-hour time frame. We'll ascertain the trend. Then, we'll look for our support and resistance zones. We will assess the quality of the moves. We want to see impulsive moves with large-bodied, high momentum candles. Things like this. Then we're going to wait for, support or resistant levels to be broken. And we wait for the retest, the correction confirmed by, rejection or engulfing candles to show us buyers or sellers are stepping back in. And then we go to the shorter time frame for our entries. Now, we will use the exact same concept of support and resistance on the 1 hour and 4 hour time frames when we look for our trades. So we know, for example, if we're on the daily time frame, and we are in an uptrend and the price is making a high point, a low point, and a new high point, right? And then we know a correction is coming to retest this previous level of resistance. So we expect this to be resistance to support. After we wait for, our candlestick rejections, we need to see a reversal of the shorter term price action. What do I mean by this? This daily correction down move consists of lower lows and lower highs as such on the shorter time frame, on the 1 hour. Now, after our rejection candles, we need to see a reversal of the trend on the shorter time frame. So, you know, resistance broken, act as support to then continue the next impulsive wave, which will consist of higher highs and higher lows on the shorter time frame. And that will be, you know, this move here. Similarly, in a downtrend, guys, you know, if we are making a new a low point, a high point, a new lower low, we again, you know, we're going to wait for the correction on the larger time frame to push up, test the previous level of support as resistance. Once we have, you know, the daily rejection or engulfing candles, you know, we wait for a shift in the market structure on the shorter time frame. So now this daily corrective move will consist of higher highs and higher lows as such. And we will simply wait for a reversal of the structure, a new lower low, a lower high, to then take our sell, targeting, you know, the previous low over here. Because now this move we are riding is the next impulsive daily move. As a result, we're able to catch large, huge moves with, you know, massive risk to reward. So here is an example of support to resistance flip. So you can see here, this is a level of support and level of resistance. The market fell to break lower, fell to break higher, almost a ranging zone. Now we have a new lower low. We wait for the price to come back. This is the level of support to act as resistance and the continuation. Similarly, in an uptrend, we have, you know, this going on. So you have resistance. This is a ranging zone. We wait for a higher high and then the potential resistance to support. We wait for the price to, you know, correct, rejection candles, and then the next continuation. So guys, to put all of this together, entries, exits, and stop losses, we're going to go to live trade examples. So I want to just explain to you, you know, how you guys are going to backtest on the charts and things like this. So firstly, we use the rewind tool, the replay tool. So I recommend all of you guys, you know, you get TradingView Pro Plus in order to utilize this tool. It's going to aid your trading. It's an investment into your, you know, your skill set and bettering yourself as a trader. So the beauty about this is if you click here, you can see we have the replay button. Now we can go back in time and practice our skill set, practice the, you know, the rules of the strategy and implement it over and over and over again. And this is honestly how I became, you know, really good at what I'm doing, is because I would just backtest all the time. I would go back, you know, all the way back, and I'm going to show you how we do it here in this module. So, you know, you can see here, this blue line will pop up once you press the replay button, and then you can literally go back in time. So let's go back and let's find a couple of setups. So I have found a few that I want to go through with you guys. You know, that will, I think, will help you guys see the setups for yourself. So the first one here is on AUD CAD. So here we can see this is the price action. So I'm able to rewind all the way back to 2017. And this is the beauty of this. We have an abundant amount of, you know, setups to go through and fine tune our skill set. So now here we are on AUD CAD. Now we're on the daily time frame. We always start our analysis on the daily time frame. So we want to go through a few things first. So, you know, what do we do first when we look at the chart? The first thing we do is we need to ascertain the trend. Is the market making higher highs or higher lows, lower lows or lower highs, things like this. So let's take a look at this price action here, this market structure. So you can see AUD CAD previously, we had this kind of movement, and now we had this lower low, a lower high, and now we have this next impulsive wave. Alright, so we've made a lower low, so we know this is in a downtrend. Now the next thing we want to do is mark out our zones. So where's the previous support level that was broken here, and we expect the market to come back. So now, you know, you can see this is the previous low, this is the previous high, you know, we're forming new lows. So we expect this to come back up around here, and then to continue on for its next impulsive wave. So we can go ahead and mark out our zones. Now, you know, we
get the rectangle tool, and I will personally mark this zone out. This looks really good. Now the next zone I will mark out is this zone in here, in case we do not react to that zone that I marked below. This is the next interesting level, because why? We can see this is a market reacted strongly, we bounced off, right? Now we formed a lower high. Now we expect this level to be retested and for this support to act as resistance. So we need to see a correction come in like this. Maybe rejections here, candlestick rejections or engulfings or in here, and our final level will be this one here, which I will mark out now for you guys. And I will mark it, remember guys, from the wicks to the closure of the candles as such. Now, we want to look at build up and symmetry and stuff like this. So you can see, this has just been dropping down, and we can change the time frame a bit. We can go to the weekly. And you can see, we've just been dropping down. So we know the market is due for a correction. So let's see what happens. Let's play this through. Now, how you use the rewind tool, this button here will, you can manually play the candles through. Now, if I press the play button, and you can adjust how fast the candles play. So if I press the play button here, it will automatically play through, and it's a bit slow. You can adjust the speed, things like this here. I personally just click through the manual buttons. Now if you want to go back again, you can just go back down to here using this button here as such. So I'm just going to manually play this through. I want to see the low established before I mark my target. So now we can see, we have formed a low, we have some engulfings here, and the market's starting to push back up. So now our target for a potential sell setup here will be the previous low point. As such. Simple, right? This is all we do on the daily time frame. So let's go through this again. We've ascertained the trend. We know the market is making lower lows and lower highs. We expect a reaction here, here, or here. The candlesticks will confirm this for us. Now we can get our Fibonacci retracement tool, and we can see where is roughly 50%. So we can see 50% is this zone here. Look at it, lines up perfectly. 61.8 somewhere in the middle. 70, 50 is this next significant zone, which I like. And then obviously we have the 100% retracement. So let's see what the candlesticks tell us here. So the market is in this zone. Now if you were to consider this as a rejection candle, it's simple. We just go to the 4 hour or the 1 hour, and we can see we want to observe a break in market structure, which we don't have. You can see the market makes a new high, a new low, a new high, a new low, and so we need to see something like this, which we don't get yet. So let's play these through to see what happens at the zone. We don't really have anything here, and the market just keeps pushing up. So let's go back to the daily. We want to see, what's going to happen at the next zone. Nothing, and now we're at the 100% level, and if you look here, if you look here, we have a rejection at the 100% level. This is significant. This is an indecision candle, and this often means consolidation in the zone. So when we have consolidation, it means we are going sideways in the zone on the 1 hour, and we want to see a new lower low, a lower high to sell the market over here on the 1 hour. So let's go over to the 1 hour and see what we get. So now guys, as you can see here on the 1 hour, we can see the price has made, somewhat of a double top. Now we need to see a break of this level as such to take a sell setup, right? Because, the daily up move here, the daily correction consists of higher highs and higher lows. We want to see a lower low and a lower high to catch that first move on the 1 hour and the start of the impulsive wave on the daily time frame. So I'm going to use my line tool here. I'm going to mark the lows as such. And we need to see a break of this level, a clear break of this level, guys. So let's play the candlesticks through. We're bouncing off the level. We're testing the highs of the range. And now we are forming a lower low. See how this is lower than these lows here? And if we go through the line tool here, which I like to use sometimes to confirm these moves, you can see we are lower than these lows. So this is a lower low, guys. Now we need to see a pullback. Now we need to see a pullback of at least 50% of this, right? So where are we going to be looking? Around here or somewhere up here. So we're going to be looking, around here or somewhere, in line with this resistance here as well for a sell. How are we going to know when we're ready for a sell? The market, the candlesticks will tell us. So let's play these through and see for a correction. Now we have an indecision candle, we could be forming, reacting to around this resistance level, and now we have bang, an engulfing candle right at midnight for me here in Sydney. So that's the US session. This is a no-brainer for me. You can see now a clear lower low. We have reacted at least 50% of this move here as such. So now we simply grab our risk to reward tool. We take a short like this. We pull our, I will set my stop loss above this high, a few pips above this high, and I will drag this all the way down to target the daily low. So this is a potential 400 pip move with a 7.28 risk to reward. Now we need to obviously pick our break even zone. So where are we going to move, pay ourselves first, close 50% of our trade, secure some profit, and then let the rest run. So, looking here, you can see quite a nice significant level here, and I will just confirm that on the 4 hour here. So a bit of multi-time frame analysis here. So I will take my profits, bang, right there. You can see previous resistance. This level was not tested once we broke. So I anticipate that we're going to have some kind of strong reaction as the market drops, some kind of bounce from here. Although we have a 400 pip target, guys, nothing is certain. So we need to pay ourselves at these significant levels, secure our trade. This is trade management, bank some profit, and then now, we see if we can break this level and then continue down to our target. We know from the larger time frame with high probability, we can hit this level here with price action and understanding, what occurs in a downtrend as we have here, lower lows and lower highs, so on and so forth. So let's go back to the 1 hour and let's see, what we get here. So we take our entry as such, stops above that high, and now let's play this through. And then we have, bang, a huge drop, and we just want to see lower lows and lower highs. A bang, it keeps dropping. And now at this occasion, I will bring my stop loss to break even, which means I've secured my trade. And now I will close 50% of my trade right here. And we bank roughly 178 pips, which is absolutely massive. And regarding our entry point, by the time we close profit here, you're closing at least a 1 to 3 risk to reward in partial. So if you risk 1% here, you'll be closing roughly 1.5%, because from your entry to your partials, that's 1 to 3 risk to reward. So you're up 3%, you close half of that, you bank 1.5%, you have 1.5% running. If you're at 2% here, you're up 6% here at break even, you close half of that, that's 3%, bang. Straightforward, nothing complex, and it's all maths and probability, guys. This is how we are so profitable using our price action strategy. Now we close 50% of our trade, and we need to manage this trade. So as you can see, we have a huge drop from here to here. We don't really have any correction. So I expect some form of consolidation at this level, and I want to see a lower low and a lower high as such. Now if we break the highs as such, obviously we have to exit our trade and close the rest of our position. I normally like to manage my trades on a larger time frame, sometimes the 2 hour or the 3 hour. So let's see what we get here. So now you can see we're reacting to this level. There's no surprises there. Now, we are pulling back to the highs here. So you can mark this as such. And this is all expected. Now, we form a ranging zone here. So you can see now we are ranging at this level. This is why this level is a great level to close your profits. You don't want to close it too early. You don't want to close it too late. So somewhere midpoint, needs to make sense. Look at the 4 hour, things like this to find a good level. Now, I want to see this move occur, or I want to see this to exit my trade. So let's see what we get here. We're still ranging through here. And now, we are breaking the highs of this range. So we know it's time for an exit. And, we don't really get any pullback. So I honestly, when I see a a large move like this, you know, I'll probably exit somewhere here, because I know there's no pullback coming, and I'll just close the rest of my position. And you know, you can see, guys, you just have to track the price action to manage your trades. So you know, we know in a downtrend we see lower lows and lower highs, or in an uptrend higher highs and higher lows. So to stay in this, we had to see this, but now we see this, so we are out. And you know, I will exit this, and if we play this through, I don't think this will come back. You know, we don't really come back, and then you know, we're back at our entry and we're out for break even. So I will just close it once we break this range, and you can see there's no pullback coming. So it's straightforward, guys. You know, it's quite simple. So we always start from the daily time frame. We ascertain our trend, you know, the quality of the moves, stuff like this, and then on the 1 hour we come in for our entries and our exits. Right, and now if you look here on the 1 hour, you can see, you know, we are just ranging. We have a higher high here, this higher high here. We have somewhat of a pullback, and you just have to exit your trade because you can see this is just not coming back. So, you know, that's a good example, and, you know, I want you guys to watch these and, you know, apply them in your own practice. Alright guys, we are here on AUD CAD again. Now, this is another potential setup. So let's break this down a little bit so you guys, you know, can understand. So, you know, previously, you know, the market was making somewhat lower lows and lower highs. These were quite small moves, as you can see. They're quite tight, and I prefer to stay away from these kind of moves. Now you can see we have this double top formation, and now we are breaking the lows here. We have formed a lower low here as such, right? This is now breaking these lows here. You can see the quality of the move. We have excellent impulsive high momentum candles here. So we expect the market to form a lower low somewhere here, pull back to form the lower high as such, and then, you know, the continuation after, you know, the confirmation of candlesticks. So we've ascertained the trend. We know the quality of the move. We can see it. So let's mark some zones out. So firstly, let's get the fib here. Let's play some candles through to see where the low has established. All right, now we can see the low has established. We can pull our fib to see, you know, where is the confluence with the fib levels and our zones. So you can see we're at 50%. If we were to mark this, this would be too soon. This is not 50%. So where's the next level that we are looking for? You can see here we have this, you know, level of resistance here previously. So we can mark this zone out like this. And now the next zone I will mark is obviously this top zone, the 100% level. So if the market breaks this top level clearly, with a, you know, a higher high and a higher low, we know the trend has reversed. And of course, the final level I will mark is our target, which will be the lows here on the daily time frame. So it's all nice and simple, guys. Only a few things, and you can see here we've ascertained the trend. We have established the quality of the move. Look at this correction. This is, you know, high momentum impulsive candles pulling back after this impulsive wave. Now, you know, we have used the fib, we have, you know, waited at least 50% pullback, we've marked out our zones. So, you know, we can see this support level was too close. So even if you mark this level here, you would anticipate a fake out, because you would see the market is attracted to these levels, 50, 60, 61.8 and the 70, 50 levels. So now all we want to see is, you know, daily rejection or engulfing candles to confirm the potential start of the next impulsive wave. So we can get rid of this fib. Now let's play the candles through, and you can see we have a strong rejection. Look at this. The buyers tried to push the market up, and then the sellers push it back down, and we close below the open on this candle. And look at the volumes here, you know, strong selling pressure. Now, these are all great confirmations for us to go down to the 1 hour. Now, on the 1 hour, it's simple. We know that this this 1 hour correction will be forming higher highs and higher lows on the 1 hour. So we need to see a new lower low, a lower high to take our trade, confirmed by, you know, 1 hour rejection or engulfing candles and our stops above a level to target the next zone down on the large time frame. So here you can see, we have somewhat of a double top. So I'm going to mark these lows here with my line tool as such. Nice and simple. Now we're going to play the candles through to see what we can get. So you can see the market is simply reacting to this zone, maybe potential head and shoulders to form here. We have the left shoulder or triple top, whatever you want to call this. And, we want to see a break off the lows. So, we are just reacting. And now you can see we have a clear triple top as such. We have now a lower low. Now we want to see a pullback, at least 50% of this move here to then take the sell, right? So let's see what we get. And you can pull the fib out here and you can wait for the level to see. So if this is the low, let's play the candles, see what happens. So you can see we have the low here. Now we are approaching the 50% level. Bang, we have a strong rejection. This is all I need to see. Now you can see here, if we get the risk to reward tool out, the short tool, this is a strong candle for me. Now, if we were to go to the previous high here on the 1 hour, our stop loss is massive, and our risk to reward is massively skewed. It's unfavorable for us. This is a 2-to-1 risk to reward. We're not interested in this. So we need to refine our stop loss intelligently so that we can, look to take this trade. And, I suggest you lower the time frame sometimes like this. And you can see, and pick the previous high here. So you can see the market makes this structure. Now we have the lower low and we are reacting to this 30-minute price action right here. So I will simply set my stop loss above this high like this. So my stop loss will go, nice and tight, something like that. I will get rid of these drawing tools for you so you can see clearly. And now we have a 3.5-to-1 trade, right? Now, where will we go to break even? We obviously have to pay ourselves at, a significant level. Now, if you look here, there's not much. There's this level here, but this is a bit too far down. So I'm going to change the time frame again. Okay, now you can see we have this strong level of support here. And I will simply go to this level. So if you go to the 1 hour, you can see, we have this level. It's too tight. So where's the next level? Look left and you can see strong level of support right there. So if you go to the 4 hour, you'll be able to gauge, where's a good level to close my trade. So as you can see, guys, this level is too close. We need to give the trade time to, materialize and to make its move. This level also still too close for me. So the next level is right here, this level of support you can see. And look at how it acted as support. We had a huge push up from this level. So this is a significant level for me. And this is where I will look to take, a part of my trade off the table. So it's, nothing complex here, guys. It's just, here if you're, not using multi-time frame analysis, you might not take this trade because the risk to reward is not good. But sometimes, just lower the time frame to see what's possible. And let's play this through and see what happens. So, we have this rejection. Now the market is playing around the zone. We are in a bit of drawdown. And we just have to stay in the trade. We have, taken the trade for a reason. We can't get scared just because we are in drawdown and close the position. This is where, a strong mindset, stuff like this comes in, and trading psychology as well. We have taken the trade according to the rules of our strategy. We know that in the long term, the rules of the strategy enable us to be profitable. And so we just have to hold this trade. We have set our stop loss in an intelligent location, and if it takes us out, it takes us out. And let's see what happens. We keep playing this through. The market is still reacting, and now bang, we are forming new lows here. We have a new lower low, lower than these lows, and we are at our break even zone where we will then close our 50% of our trade and bring our stop loss to break even. So now we are secured, and we simply just have to manage this trade. Now we make a new lower low. You can see we have this low here, lower than this low. This is the previous high. Now we expect the reaction here to continue downward. And let's see what we get here. So we are forming a lower high, now we're pushing down, now we're in a ranging zone. You can see this is a ranging zone, very clear ranging zone through here. Now we need to see this to our target, or if we break to the upside, we are out at break even. And we simply just keep managing this trade. So we need to see a break through here. We're reacting to the lows of the range, back to the highs we go. And this is still no reason to get out, guys. This is not a higher high here. You can see the market is reacting to these high points. So this is simply a test of the range, and you can confirm this by changing the time frame. So go to the 2 hour here, and you can see very clearly this is a ranging zone. And we need to see, something like this to our target. This is why I like to use the higher time frame sometimes to manage my trades. And you can see now we break the range, we have a lower low. We expect a lower high, and then possibly a full target, and that's what we get here. So you can see now the market pushes down into our profit area, and I will simply just close out the trade because we are in the zone now for a full target. So nice and straightforward example here, and it gives you a bit of context as to the importance of multi-time frame analysis here. So as usual, we start on the daily or the 12 hour, the larger time frame. This is where we gain the hypothesis for our trade. This is where we gain the sentiment of the market. And then here we use the 1 hour for our entry in here. And the risk to reward, if we were looking at the 1 hour alone, this would be too high. Stops up here would be too far away. So this is where you have to contextualize the market a little bit. And if you just lower the time frame a bit, the 30-minute, you can see a clear lower low, and stops above this high here like we have set, and it's in a safe location. We can squeeze out the maximum risk to reward, and we have a full target here. So nice straightforward example. I hope it all makes sense to you guys, and let's jump to the next one. Alright guys, we are here on AUD CHF. So, as you can see here, again, we're just going to go through the process over and over again until, you guys understand what you're doing. So again, you can see here, we're looking on the daily. Again, we're not looking, all the way back to, 2019 and stuff. We're interested in the most recent price action. So for me, the price action I'm most interested in is this block right here. So let's zoom in and let's take a look at what's going on. What is the price doing? Now you can see over here, we have broken this low here. The price is in a downtrend, right guys? You can see that very clearly. We have now broken the lows. We have broken this low. We have a new lower low. And we expect the market to pull back. We wait for some form of, rejection or engulfing candles after the corrective phase before the next impulse. Nice and simple. Now we need to take a look at the quality of this move here. So you can see we have this. Look at the build up here from here to here. You can see large momentum red candles, very clear set direction, which is what we want to see. Now we have the lower low. We will wait for the low to establish, and we can now mark out our zone. So again guys, I'm just gonna pull the fib here so you guys can see we are always interested in at least 50% pullback. Now as you can see, there's not much price action going on here to the left. So for me, I will be interested in this level here. However, I'm going to be wary of a fake out of this zone. So I expect, possibly the price, like I said, it's attracted to these levels here. So, the candlesticks will tell us when we're going to be ready to drop. And the next level I will be interested in is the, this top level here, something like this. And you can see if the price, pushes through here, we form a higher high and so on and so forth, a higher low, the trend has reversed, all right? So that's why we're interested in that level, and I will pick an intermediate zone just looking left here. This level looks really good in here. And that's all we need on the larger time frame, is 3 or 4 levels that just make sense for us, right? Now, you can even join the dots here. You can take this level as such. So we are expecting, you know, maybe you can see that we have nice confluence here. So we either push up as such, or, you know, we fake out of this trend line and we push into this level here. This is why trend lines are, they're simply, you know, secondary to me. They don't carry a lot of weight. Sometimes it's nice to, you know, mark out the moves with a trend line. However, guys, I must, you know, emphasize that price action is key. Even if we push to this level up here, you can see the trend has not reversed. There is no higher high. We are not higher than this high. And sometimes, you know, we break a trend line and people are already buying the market, and that's a fake out. And often you'll see a break of the trend line followed by, you know, a sharp move in the opposite direction, because that's a fake out. It trapped all the buyers buying incorrectly. And now, you know, I will mark obviously our target zone. So it will always be the previous low if we're selling the market, and if we're buying the market, it will be the previous high. Nice. So, you know, this is all we chart up on the daily time frame. Now we play the candles and we want to see some kind of rejection. So here we're at 50%. You know, it's of interest to me. So let's go to the 4 hour and see if we can see any shift in the market structure. So as you can see on the 4 hour, we have established, you know, a low here. So we want to see something like this on the 1 hour. So let's go to the 1 hour, see what we are having. And like I mentioned, you know, on the 1 hour, here is the previous low. So, you know, we want to see something like this to take the sell. So what do we get? You know, the market is testing and we are pushing to new highs and higher lows as such. So let's go back to the daily and see where is the next level of interest to us. Here you can see on the daily time frame, the market is pushing up, and, you know, we don't have anything convincing yet. There's no lows, there's no, you know, volume spikes or anything like that to show us that this is ready yet. Now we're at the 100% level, and now we have indecision candles, but look at the, you know, the volumes here. This volume is quite high, and we have an indecision candle. Now, what did I mention to you guys in one of the previous examples? When you see these kind of candles, it means on the day the price has been ranging in the zone, and there's no, you know, no surprises here. We're at a significant level. This is the last level to react to the trend. What do we need to see on the shorter time frame? We need to see a lower low, a lower high to take the sell on the market. So, you know, we don't have that yet. So now if we go to the 1 hour, let's see what do we have. As I mentioned to you guys, we have a ranging zone here. It's very clear here. You can see the highs of the range. You can see the lows of the range through here. Like this. So we need to see a break to the downside, as usual. A break, a retest to take the sell. Now let's play this through on the 1 hour and see what we do get. You know, you have test of the lows, test of the highs. Now we have a lower low here. This is a clear, you know, we're pushing down, we have a lower low. Again, we can use the line chart to confirm this. We are breaking the lows. So let's go back to the candles and see what we get. Now you can see, you know, a clear lower low here. And now we need to see a pullback back to this level up here. So you can see previous support level on the 1 hour. You can see this previous support. We want it to act as a resistance, confirmed by candlesticks, right? So now the market is pulling back, pulling back. Now, you know, we have some candles. We want to see some strong candles, and here we go. We have a strong engulfing candle right here. And what do we have to do? So this is actually 6 a.m. in the morning for me here. This is, you know, the conclusion of the US session here. So I will take this entry. I will set my stop loss like this. My entry here, I will take my stops, you know, tight like this above this level here, and my target all the way down to the lows, all the way down here like this, guys. And you can see we have massive risk to reward, 10.82. Now where I will pay myself will be somewhere here. You can see, you know, this is a nice level here, previous resistance. We never tested this level again, so I anticipate, you know, we can get some kind of consolidation and the slowing down of the move here. So that's where I will pay myself. Nice and simple, guys. All we are doing is we start from the daily, and then on the 1 hour we know, okay, once we have those rejections, the next break and retest, that's our entry point, and it's just a matter of waiting for the market. So we can set our stop something like this. It's just a 30 pip stop, and we have a 9.3 risk to reward. So let's go ahead and play this through and see what we get. Now we retest the zone, testing it now, and we just want to see the market drop. So now you can see if I remove this red writing here, well, I can't seem to get rid of it, but if you can see clearly, we are ranging here now at our entry to here. So we need to see some form of break and retest, push to the downside as such to remain in this trade. And we can see we are breaking the lows here through here, somewhat of a lower low, and we just have to stay in this trade. We're still ranging, and now we can change the time frame. You can see we are ranging across the 1 hour. We want to see what's going on now clearly. So go to the 2 hour or even the 3 hour, and you can see very clearly. I will stick to the 2 hour here for this example. Back to our entry zone, and we must stay in this trade. There's no reason for us to get out. And now we push to our break even zone right here. And if you check this out on the 1 hour, you can see we hit the zone. We close 50% of our trade. The risk to reward here, where our break even is 1 to 2.5. So if you're risking 2%, you're closing. If you're risking 2%, you're up about 5% here, and you're closing 2.5%, which is huge just in break even. And now you must manage the trade. So from here, if we go back to the larger time frame, we can see we've broken the lows of the range through here as such. We expect a retest and then the continuation. So what do we get? Just playing around, we're retesting, and now we get a spike up, and I believe we would be out at break even, not yet. And we're retesting here, you can see this, and if you look at the 4 hour as well, you can see a clear lower low, a lower high. We have a strong engulfing. We must simply stay in this trade. However, we keep pushing up, and you would be out here. We're definitely out here at break even. And what does this do? We do get the drop and the continuation, but it is what it is. The market does what it wants. And sometimes we will be unlucky when we get taken out at break even, but we have to manage the trade. We're not in the business of being correct. We're in the business of making money, and that means trade management. It's pivotal in that. So we pay ourselves at our zones, we respect our exit points and stuff like this. And so you can see we have a lower low, a potential lower high again, and we form this kind of ranging zone again through here. But we are out of the trade at this point, and I just want to show you guys this. And we have the market just continues ranging here for a while. But you can see, I want you guys to understand that it's all in the trade management. Our entries, where we pay ourselves, stuff like this. We go to break even here on the 1 hour, and we're out, but it's all right. These things happen, and I can just show you trades that hit full target just to make you guys feel good, but you're not going to learn anything. This is why I'm incorporating examples here which take they include everything: trade management, break even, stuff like this, so you guys can understand the difficult setups and stuff like this. Because when we hit targets, it's easy. We don't have to do anything. We just see lower lows and lower highs. In this case, if we're buying, higher highs and higher lows. So another very important setup here, guys, and I hope you guys understand it. You understand the entry. Very clear lower low and a lower high to take this entry here on the 1 hour. Let me get rid of this so you can see. To recap here, you can see very clear lower low, lower than these lows. We have, a triple top again, lower low, rejections, bang. We have the drop, consolidation, and this is why we have to stay in the trade. Yes, we see, significant profit, back to entry, profit, back to entry, stuff like this. But you have to understand, the concepts here, the price action. If we're ranging, there's no reason to get out of the trade. And we are protected. So we are protected from this ranging zone here. Our stops are above the highs of the range. If the market pushes up, we are out of the trade. We lose, 1-2%, whatever it is we're risking. However, we stay in the trade, we have huge potential here, and that's what is important, and we need to see that occur. Alright guys, so I'll see you in the next example. Alright guys, we're here on Euro JPY. So, again, the price action, I'm only interested in the most recent price action. I'm not interested in, all of this stuff going on to the left here. So, I like to, zoom in nicely like this. And let's break this price down, alright? So, first things first. You can see we have the previous high here. We have broken these highs. We have a new higher high. Here's the previous higher low. So what do we expect here? We expect the market to pull back and then the continuation after this higher high, targeting the highs up here. And we expect a higher low, something like this, at least 50% after we have the candlestick rejections in the zone, right? Nothing new, everything, we've been through in the previous modules. Now it's just applying it, because these patterns, they transfer on the charts in different variations, and it's just training our eyes. This is why we backtest. This is why we backtest often. So we train our eyes. We have that sixth sense trained and ready to go when we see it on the charts. So here we have the higher high. So now let's take a look at the quality of this move, right? So you can see, here's the impulsive wave. We have excellent build up, nice large volume candles, not too much indecision going on. It's nothing like this here. It's very clear impulsive wave. So next we want to mark our zones. So I will firstly mark this zone right here. This is the previous level of resistance that we expect to act as support. So this is a buy example, guys. We've done a few sell examples. There's a couple of buy examples now. So you can see we have, the previous high, we have a new higher high. We expect the market to pull back, something like this, and then, continue on like this. This is all the nature of price movement. Now, the next zone I will mark is, I will mark this, we have this very clear level of support here. I will mark this as such. All right, now we can pull our fib. So we have, we have this move here. So we have this is the start of the impulse, and then this. So I'm going to pull my fib from this low to this high. So in a sell setup, when we have lower lows and lower highs, we pull the fib from the previous low to, the previous high, and then, we want to see 50%, 61.8, etc., etc. In a buy setup, we go from the previous low to the new high. As such. So let's get the fib tool. Let's see. We want to see at least a 50% retracement for some nice symmetry. So let's play this through first. See where the high establishes. All right. So now, from here to here, we can see 50 lines up exactly with our zone. So we can get rid of this. And now we simply want to look for candlestick rejections here. We can also, join the dots if we wish. With a trend line, something like this. So you can see where we have the confluence with the trend line, and we have this form of rising channel going on here as well, but I'm going to remove that for now because we want to keep a clear chart. Now we want to see a nice rejection candle, which we get. Look at this, guys. You can see sellers tried to push the market down, and then buyers pushed it back up, and we reject. And this lines up nicely with our fib levels as well. If you look here, almost 100% retracement here. No worries. Now we want to mark our target zone, which is always the previous high here as such. Right, this is going to be our target. So now we have everything. We are reacting with the trend line. Price action is confirming this. Again, the trend line is secondary, guys, but it adds confluence, and sometimes, you can see that the price action is key. First, the price action, okay? Now we have the rejection in line with the trend line. Okay, it's good. The trend line is validated here. Now we can go to the 1 hour. So if we look here on the 1 hour, what do we have going on? So over here on the 1 hour, you can see, we have this push down, a high, a low, a new lower high. So we need to see, some form of break and retest. to continue on. So if we get that, we can see a potential inverse head and shoulders forming. And if we get this, would be a great entry, right? So let's play the candles through. The price needs to develop a bit here. So now we have a new low. So you can see now we have this inverse head and shoulders as such. So we need to see, a break of this level here. So I'm going to get my line tool again. I'm going to mark this level as such. I'm going to change the color so you guys can see, and I'm going to increase the thickness. Alright, so we need to see a break and a retest. So here we go. We have a new higher. We have a new higher high here, guys. And what we need to see is the pullback and then the continuation as such, right? All straightforward, all price action. Now we're pulling back. Now we have, okay, here, for me, this is a good entry. We have a 2-candle engulfing pattern here. We're in the US session for me, and I take the long position here, bang. Something like this, my stop loss, below the right shoulder here, and my target all the way back up to the previous daily high here, when we have a risk to reward of roughly 4.71. Now, where am I going to pay myself? So if I look left here, we have some nice price action, and I like, this level right here. As you can see, if we look left, we have, nice resistance, acted as support. Now we dropped, this is a nice level for me. I expect some form of consolidation here before maybe we push up, if that is what we get, if the market does push from here. So let's play this through. So entry is this 2-candle engulfing, and let's play this through. So now we push back, we're retesting, playing around the zone, and now we have some move. Now we have a new higher high. We want to see a new higher low, and we get this. So now we're reacting to this previous high here. So we need to see breaks of these levels here. So we need to see something like this, right? All straightforward. So what do we get? And the market's pushing. Now we have a new higher high. We're at break even. We're going to pay ourselves. We're going to close half our position, and we're going to continue on. This is a potential 250 pip trade. As you can see here, risk to reward 4.5 to 1. We've paid ourselves. Now, we can even change the time frame here for trade management. So you can see here, guys, we've broken, the previous high, new higher high. We could get something like this. So we have to stay patient. We're not going to go in a straight line to the target. We'll always move in waves as such. Sometimes we'll have consolidation, things like this. And we just have to stay patient, and we have to look out for the reversal in the trend, which this is a buy setup. So we need to see a new lower low and a lower high if we are to get out. Otherwise, we could just keep pushing on to our target. So what do we get here? Here comes a bit of a pullback. Now we're testing the highs again. Now we're ranging here, guys. You can see very clearly we are in a ranging zone here. Through here and through here. So we need to see something like this to stay in, or something like this to get out, right? Straightforward. All price action. Everything you guys already know. We test the highs of the range, testing the lows of the range. We still have nothing. Clear range bound move. We're trying to break. We have no break. Now we have a lower low. Can you see this, guys? We have a lower low. We've broken this low. We have a lower low. So let's go back to the 1 hour and see what's going on. Clear lower low, and we want to see some kind of pullback into the to form the lower high. And then bang, we get some, must have been some fundamental event going on here, and one candle just retraces almost, how many pips is this? 120 pips in 1 hour. And this is the nature of the market, guys. This is why it's pivotal we manage our trades, we pay ourselves, we respect our partial targets, our full targets, stuff like this. And on this occasion, honestly, I would be out. I would be waiting for a bit more of a pullback, maybe at least 50% of this move. Didn't come, we would have just dropped. And you're out of the trade at break even, and you take what you get. Again, we're not in the business of being correct. We're in the business of making money. On this occasion, you know, we're slightly unlucky. You know, we get stuck on the wrong side of some fundamental news and we're out. And this is why we manage our trades. So another really good setup here for you guys. And if we were to stay in this, you know, we would want to see this, you know, react to the lows of the range, push up to our target as such. And that's not what we get. So it's the importance of managing our trades. We don't want to just take an entry and then hope for the best for a full target. That's not how it works. Alright, so I hope this is all nice and clear for you guys. Alrighty traders, here we are on GBP AUD. Now, we're here on the daily time frame again. Now you can see here, if we break down this price, what do you see here? We see the previous high point here. You know, we see a higher low here. Now we see a new higher high, right? So as you might have guessed already, we are looking for a buy setup as such, right? And the next impulsive wave, straightforward price action. Now, you know, we are at this interesting level of resistance, so we expect a pullback and the continuation. So let's go ahead and mark our zones here. So firstly, you know, you can see we have this previous level of resistance as such from the closure of the candles to the wicks. And then the next zone I would mark out would be, you know, I would take this low here, this level of support here. Now, why would I take this level and not this level? Because, you know, again, it's too tight. If this was to push down and do this, this is not really a lower low, because you can see we have this huge level of support. So this is the level for me. So, you know, for the trend to completely reverse here, I need to see a break, a retest, and a continuation as such of this level. Makes sense? Alrighty. Now, we can even, you know, join some dots as such. You know, we can join the lows as such. Let's play some candles through so we establish the high. And our target will be simply the previous high. Higher highs, higher lows. We target the previous high when we buy. Now, we want to see some candles, you know, around here before the next continuation. So let's get our fib out and make sure everything lines up nicely for us. So previous low to the new high when we are in an uptrend, making higher highs and higher lows. We can see we have 50% here, 61.8. We have nice levels of confluence with our zone. So let's play the candles through and see what we get. So you can see, you know, we have some rejections to that 50% fib. We have some buying pressure coming in, sellers pushing the market down, and then we have now this engulfing candle here. This is a good opportunity for me to go to the 1 hour. And if we look here, we have, you know, nice 50% level. We're actually reacting to this level, right? And if I fix this up, you know, we're pretty close to the zone here. Now, so let's go to the 1 hour time frame and see what's going on with this price action. You can see now, you know, previously we were, you know, this price action was very clearly in this downtrend here. We have lower lows, lower highs coming through. Now we have broken this level of resistance right there. You can see, you know, we had resistance, somewhat of a resistance. Now we've broken this. We want to see something like this, confirmed by the candlesticks, right guys? So let's play this through and see what we get. We have a gap on the open, so I want to see a nice, you know, rejection or engulfing candles here for me to take entry. We still have nothing, and then bang, we have this here, and look at the volume spike, confirmed. So we will take this entry as such, this, and on this occasion we will pull our stops something like this below these lows here, and you know, we can take our target all the way to the top here. So it's a 480 pip trade with a risk to reward of, you know, 6.5, 6.5. I'll go something like that, nice and tight. Now, where will we pay ourselves on this occasion? So, looking left, what do we have? We have you know, this level of support somewhere here. It was never retested. I like this level. It's midway to my target. I will pay myself here. You can see, you know, this is an intraday level on the 1 hour, nice level of support. You know, we can find some form of consolidation here at this level. So, you know, we want to pay ourselves, secure the trade, and see what the market gives us from here moving forward. So let's start playing this through and see what happens. As you can see, you know, we start to make a push. We continue. The market's just, you know, playing around, retest the level, coming back. We still have no reason to get out of this trade. We know in an uptrend, we want to see higher highs and higher lows as such, right? So just because we form a lower high, that's still no reason to get out of the trade. As we have here, we have a lower high, there's still no reason to get out. And, you know, if we are to form a lower low, we are protected. So we need to stay in this trade. No risk, no reward. So let's play these candles through and see what we get. You know, we're still just consolidating. You know, we're testing that level still, and now off we go. We have a new kind of higher than these highs, and we are up and running. And now, you know, we just have to wait for our partial zone to secure this trade. And here we go. Now we have partials. We secure this trade. You know, we are roughly up around 1 to 3. So again, you risk 1%, you're up 3% at this stage. You close half of it, you bank 1.5%. You risk 2%, you're up 6%. You close half here, that's 3% in the bank. And now we just have to observe this to the target. So again, let's change the time frame a bit here so we get a better picture of what's going on. As you can see, you know, we had consolidation through here. We have the new highs. Now again, we're breaking this structure here. We expect something like this heading towards our target, right? So let's see what happens here. Let's play the candles. Now we're forming a potential higher low. We still have no reason to get out of this trade. Now we're at the lows of this range here. There's still no reason to get out of this trade. We are reacting to this range. We have a higher high here. We have a higher high. We have 100% retracement, bang, and we expect this, you know, we want to see this push upwards. So we need to stay in this trade still. This is why we pay ourselves, and now we, you know, we ride this wave, these daily waves. So the market's still pushing. There we go. Now we have the higher low, the new higher high. Again, simple. We want to manage this as such. So now we expect this to, you know, pull back around here, and we need to continue to observe higher highs and higher lows on this towards our target. Now the market's playing around, and, you know, bang, we head up here. And, you know, I will just close my trade here around these levels, because, you know, we're pretty much at our target. The job is done. We're in the business of making money, and there we go. We have a full target. So, you know, it's all straightforward, guys. So just following the rules. We start on the daily time frame and we apply our knowledge over and over again. Higher highs, higher lows, price action. This is the key. You can see the key in price action. When you apply price action to the charts, you understand what's going on in the market. Because price on a chart is, you know, it's the psychology of the market. It's transferred to the chart in terms of candles. So when you can understand the price action, you already have an insight into the sentiment of the market. And, you know, this is the potential. You can see here a huge 6.64, 480 pip trade. For some traders, this is, you know, they dream of making this in a month. Here we make it, you know, in one trade over the span of, you know, this is like February 10th to, you know, a 2-week period. And this is where our money does the work for us. We don't need to take 20 trades in a month or 20 trades even in a week. We're very selective, and we ride these huge waves with high probability. And this is what, you know, enables us to bank massive profits. For example, here, you know, if you risk 2%, because we're trading with the trend, the larger daily trend here, I would have risked 2%. So this is, I would have already closed 3% and then closed another 6.66. So, you know, close to 10% here on just one setup. And this is the power of what we do here. And this is the power of the skill set you are learning.